In terms of Russia and Saudi, look, I think particularly, or just generally, I'd say OPEC policy, they have been very concerned about demand concerns, right? Whenever I am speaking with any of the ministers, really, and Prince Abdulaziz in particular has even highlighted that the macro concerns with the Fed raising interest rates does mean that demand is likely to falter sooner rather than later. So you heard him say, right, he is being cautious, he's preempting that slowdown, and that's precisely why they wanted, or rather even right now, they want inventories to be low enough so that when there is a demand slowdown and we get a build, we actually don't put too much downward pressure on prices. As for high oil prices causing a demand slowdown, I mean, look, the reality is what matters is gasoline and diesel prices, right? And crack spreads have been coming off a lot. I mean, gasoline cracks have cratered over the last month or so. So even as Brent and TI have been going up, we are not paying higher or more at the pump. And I think that's the bit that gets lost. We've had a lot of media headlines as Brent and TI have started to rise, but the reality is that pump prices haven't really changed.
Yeah, absolutely. And, you know, it was those crack spreads, it was those distillates, it was those products, and everyone said that's where you've got to look at because that's where the problem is, that's where we're tighter. Amrita, the oldest adage in the book is the cure for higher prices is higher prices. The Saudis know this better than anyone. I can't help thinking, though, but by taking prices high, by squeezing the consumer at a time when everyone is struggling for a whole host of other reasons, making oil part of the problem is just not the smartest medium-term policy as well. Have they made a big mistake in taking 5 million barrels off the table at a time when people are struggling in 100 other ways?
And I completely get your point. Look, high interest rates, having had zero interest rates for 12 years, is going to be hurting consumers. And we've already seen lots of cracks, whether it's in the US, whether it's in emerging markets. But I also really don't think $90 oil is a high price. Yes, when crack spreads were $30, $40, when we were basically paying $130, $140 for gasoline and diesel, that's a different issue. But we're not paying that right now. And I really do believe OPEC Plus, firstly, I don't think they've kept 5 million off the market. Remember, a lot of these countries can't even produce their nameplate capacity. But I really do believe OPEC Plus, and particularly the voluntary cuts that have been taken off, if the view is that the global economy could do with lower prices and it requires more supply, I do think Saudi Arabia will come and give those barrels back. So I don't think the tightening is, you know, it's not geared towards putting pressure on consumers. Of course, there's a causality here with regards to what causes what, but I do think the macro outlook has been bleak for some time. It's just that Q3, there was a lot of euphoria around, oh, we've averted a recession. We've never been of that view. I think that data is just coming to roost right now.
Yeah, and look, His Royal Highness Abdulaziz bin Salman, he knows this better than I do, but when you say give those barrels back to the market, it takes years to get that market share back, potentially. The 80s being a great example, the mid-80s, of how long it took the Saudis. Once they'd taken market share off, it takes a long while to get it back again. So they're fully aware of this. I'm preaching to the converted here as well. But in terms of, I think, the biggest X factor that you and I haven't mentioned yet, and that is Chinese demand. We've all been very surprised, despite the concerns about the Chinese economy, how robust the Chinese demand has been regardless. But has that been a head feint? Has that been about filling up a Chinese SPR? And actually, is real Chinese demand weaker than many people have feared as well, or actually not? I mean, that's what I really want your insight on.
No, and I was in China for the first time since COVID just a month ago now. I was pleasantly surprised. Traffic is back to normal. It takes about an hour to go 5 miles. I could have run faster, so I was like, okay, demand's back. And I think every refiner we've met has said one thing, that Chinese oil demand and the macro have completely decoupled. You can see that in the data right now. Gasoline and jet, we know it's the reopening. That's why people are traveling. What surprised me, Steve, was diesel. You would think with the manufacturing slowdown, diesel demand would be weak. It hasn't been, and I think one of the big takeaways for me from China was the composition of Chinese demand is changing. In the past, say 5-6 years ago, diesel was 40% driven by transportation. Today, that's 70%. More coal moving around, more e-commerce. So it's not, I'm not saying that oil demand growth is going to be 1.6 million barrels per day from China again next year. This was a COVID reopening. But I do think it'll still be 500,000. And the SPR, they've actually been drawing down down some of the commercial inventories, and they have some refilling to come in the coming months. But that's really not been the big driver. Product demand is actually pretty robust there.